Primer, it's Tribeca Trade Group, and this is your end of day recap for Monday, December 11th. Risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any advice or recommendation. So, the start to really a big event-driven week that we've have going on. We did get a couple of the events out of the way. We had a couple of the bond auctions. We had the 3-year, we had the 10-year bond auction, which seemed to go okay as far as didn't really kick up any volatility. But I would remind you that tomorrow we have the third of the bond auctions, and sometimes that third bond auction of the week can really kind of ignite things a little bit. So, and again, you just don't know. You don't know what the demand is going to be. I'm not a bond expert. I'm not taking, I don't work for a bond desk, so I don't know what the demand is going to be. But that's tomorrow, and that'll be at 1 o'clock. And of course, that is, just kind of covering, all the events. Obviously the CPI report will be tomorrow at 8:30. They're looking for point zero, like 0.0 is what they're looking for. Ex food and energy, they're looking for zero point 0.3. So, again, this is, I'm not going to spend a lot of time here because I'm not an expert on determining what the CPI will be because I don't measure this. And we've had some things, obviously, I think people have noticed that some things like used car prices have come down and energy costs have come down. But the thing that has not come down is wages, right? We just had that in the jobs report on Friday that wages actually ticked up a little bit. So that's another gauge of inflation, and that's why it's complicated. I think you just kind of have to wait for those numbers to come out. Now, quick scenario analysis is if this number comes in hot, and I'm giving you logical reactions here, but if this number comes in hot, then yeah, the market probably sells off. Volatility probably ticks up a little bit, right? Because the market is starting to price in rate cuts for next year, and that's really dependent on the path of what inflation does, right? So when you kind of get a little bit of this understanding of inflation and interest rates and what the Fed does, you could kind of have a little bit of a logical base. And then if the number comes in flat, you probably won't see that much of a market move at this point because I think a lot of it is kind of priced in. And if it jumps lower, then you'll probably see more of a rotation into things like small caps and regional banks and that type of thing if it really comes in lower. So, I kind of root for like a number that's kind of close to zero, negative 0.1, that would be nice. And then, I'm not positioned in regional banks, so I don't really want to see a big negative print because I'm not positioned that way. So speaking of positioning, let's talk about, that was the kind of the question of the day. And then we will talk about some of the market moves, like the semiconductors had a huge day today. Really nice follow through, up 2.4% for the semi ETF. But yeah, there was a lot of rotation today, and I get this. This is a little bit of a hard concept because you don't have a lot of people talk about this too much. But yeah, we have quadruple witching, which is another event for this week that goes on Friday. So one of the things that I tweeted out, and I'll try to explain this as clearly as possible. I know it kind of gets lost in the shuffle a little bit, but yes. So for example, right, there's these cues changes for quadruple witching, right, where you get Zoom is kicked out. Dash is added, and Dash had a nice update today. I was in that stock, and I actually sold it today. And then there's a few other ads, deletes. Now, what else happens on quadruple witching? It's not just these one-off adds and deletes, but the whole portfolio gets reweighted. Why does it get reweighted? Well, so first of all, what is index rebalancing? Well, index rebalancing, if you know a little bit about how the Qs or the SPY works, you know that it's a modified market cap weighted index. So when do they strike it as to make that into the modified weighted benchmark index, right? They do this 4 times a year. They do this December, March, June, and they do this in September. Why do they need to do that every 4 months? Well, because there is something that's going to change over time that is going to affect the rates, right? Because if they want to keep everything market cap weighted, right, which is based on, the how big the company is, the market cap weighted, the variable that fluctuates is price. So as things become, and that's why, look, you've heard this over and over this year. Oh, it's only the Mag 7 stocks and da 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 da. They have become large weights in the S&P, right? I think that. I think everybody knows that. Apple's 7.4%. So the more that these things, if Apple rallies more over the quarter, what has to happen is it becomes a bigger weight than what the benchmark should actually be. Same thing with Microsoft, same thing with Amazon. So there's a formula. I'm not going to go into the formula right now, but what happens is those, if they grow too fast, they have to be actually sold, right? And so this Q's announcement, which is kind of interesting when you look at the weights in the Q's, right? And you look at some of the names that are the smaller ones. So for example, they're kicking out JD.com, they're kicking out Lucid. This is not a big deal. This is 10 basis points, right? So if you look at this column that says net, right, that's the weighting in the Qs, right? And again, you notice that Apple's 11%, right? So that's large. So that will probably come down a little bit. So the easiest way that I can also describe this to you, that whenever there's the quadruple witching, because I do one of these videos every quadruple witching, everybody forgets, because I guess I get it. It doesn't happen for 3 months. Sorry, I said 4 months. For 3 months, quarterly, right? So there's my first error in this video. The easiest thing to do is to look at, and then I'll come back to the Qs. But if you look at an equally weighted index, so all this happens, by the way, on the close of Friday, right? And I liked how Michael Santoli described it. It's very mechanical, right? So if you look at the XRT ETF, this is an equally weighted ETF, different than market cap weighted. Every name gets the same exact weight. Why? So if you go back to this net column and you look at this column, you'll see that not everything is the same weight. The Gap has gone up, Victoria's Secret, Foot Locker, Abercrombie, right? Why do you think that these are the bigger weights in the index? Well, if you look at GPS, and if look at what GPS has done over the last quarter, right? Boom. Like so Abercrombie has gone up a huge amount, right? So because their prices have gone up, sorry, let me get the screen back. Because their prices have gone up so much, they're a higher weight. Same thing with Macy's, right? Macy's announced that they're getting taken out. I don't know if the weights update today. It may take a day to update these, but probably Macy's would jump up higher just because the price is higher, right? And it becomes a larger weight. Now, if you look at the names that are on the bottom of the list, right? Look at Shoe Carnival, for example. And we could look at some of the other ones, but what's Shoe Carnival is one that I recognize. SCVL, right? Look at what it hasn't done the same thing. Well, it's gone up actually from it looks, or maybe it has, but it hasn't gone up with the rest of the index. So therefore, what they'll do now, they may add and delete some names in here too, but most likely they're going to have to reweight these things down. So that, so probably the average weight in here should be 1%. And this, you'll see this on Monday when all the rebalancing is done. Keep in mind, all the rebalancing is done on Friday on the close, right? Sometimes you hear Monday, that's when you can actually see it. It'll be done. It'll be over with and through on Monday, but you'll be able to kind of look at your weightings if you go to the company's website, and you'll be able to see what the new index looks like. But that's the easiest way that I could describe it, is the variable that changes between now and the last rebalancing date, which happened in September, is price. And that's why you have these and by the way, it's an easy way to tell, like, what's the names that have gone up the most in a particular group. Look at the top weightings of an equally weighted ETF. And you'll see these names are your best performers, right? And that's why they're the biggest weights. So will this upset, being that Gap has to be sold and Victoria's Secret has to be sold? Well, the next thing to look at is what's the assets that's tracking the XRT ETF. And you could go down here and you could see the market cap. There's about $436 million that are following. Now, you also have to take the short interest because a lot of times people use XRT, believe it or not, for shorting, right? So if you take the difference, and I guess the short interest is 19 million shares, right? So if you take the difference between that and the shares outstanding. So there's actually more short assets following this ETF than there are long, because there's only 6.4 million shares. Regardless, we're not talking about a very big rebalance where this is, again, it's the weights. But if there's no assets that are tracking the ETF, then there's not a lot of buying and selling. So it really depends on who's tracking the ETF. Now let's look at the Q. So this is again very light, 6.4 million shares, and what did I say, 19 million shares short interest, right? You do the math, and there's only like it's 13 million shares. That's not a lot of big assets that are tracking XRT. Now let's do the same thing for Qs, right? How many shares of the Qs are outstanding? 556 million. Right? So it's a little bit of a bigger thing. There's a lot more assets that are following the Qs and that are benchmarked to the Qs that will need to do this rebalance. Now, it's very mechanical in nature. So one of the questions, I tweeted this out earlier and said, what do you think, will this be a trend change or will this be a one-time thing? For now, it's kind of a one-time thing. It's not to say that there's not going to be other rebalances out there, but once they do this rebalance, right? And by the way, they're positioning for it now. They don't wait to the close of business on Friday, right? So the S&P and the NASDAQ, they release all of that information on the close of last Friday, right? And they give the heads up because I used to do this in another lifetime when I was on an institutional trading desk. I had to do these rebalances, right? You had to figure out and try to, and we would actually be long short. For funding reasons, the Qs versus the basket of the Qs, right? All in all, it's the same thing, but sometimes you get a cheaper rate on the holding the basket versus the ETF. That's a whole nother trade that's involved, and that's institutional trading and trying to arb interest rates. But that's a whole nother situation. But just to give you an example of what goes on institutional trading desks. But yes, so they're not going to wait till the close of business on Friday. Once they have that data in hand, institutional trading desk, what's called the portfolio desk, will start to kind of leg into knowing, computing how many assets are tracking this minus the short interest, and then figuring out how many shares actually have to be traded for the index rebalance. All right. So I hope that helps, right? All in all, like in all of this, if you're a little bit confused by this, just understand that this is a one-time, they're positioning. That's why I go over the events of the week and say, hey, quadruple witching, index rebalancing is kind of a thing, right? Because a bunch of people are like scratching their head. They're like, I don't understand. Well, we have options expiration this Friday, right? Well, this, in my opinion, is actually like, I know options I don't want to say options expiration is not important because people who just follow options will go nuts. But it's important to kind of understand all the pieces of the puzzle because when the S&P and the NASDAQ do their rebalances, yes, you get drastic moves like you had today. But yes, there will not be another index rebalance next week or the week after that or the week after that. In fact, it won't happen again until March, right? And again, it will depend based on the performance of things, all right? And again, I think that's why NVIDIA trailed a little bit today. Right. And by the way, what we're looking at is just one index, right? So if you look at this, NVIDIA, which I don't think had any particular news, was down 1.8% today. And the SMH was up 2.4% today, right? It's just it's a larger component, not only in the Qs, which have all those assets tracking, but it's also a big component in the SPY. SPY also gets reweighted, right? So it's not just the Qs, right? It's every index. And the more assets that follow, right? People always come up with these conspiracy theories about why ETFs are bad, right? Well, one of the things that you could argue is that, hey, there's a lot of money that's following that is following these ETFs that will get rebalanced. So it's going to create this type of market moves and the week of quadruple witching, right? It is what it is. And the best that you could kind of do, be aware, you don't have to be trading these types of things. You just want to be aware when quadruple witching is, because you're going to see these types of moves that look a little bit like, a head scratcher type move when you look and you see all of the FANG names are down. right? But it's really makes a lot of intuitive sense. And that's why I go over it, and I go over it with members ahead of time. I think we talked about it on Friday, and I give the XRT is the easiest thing to understand. Now, let's get to today, all of that, right? And that's why this week is a complicated week, because not only do you have the quadruple witching and the index rebalancing going on, but you also have the CPI, the PPI, the Fed meeting, and so on, and the bond auctions and everything else this week. So it's not an easy week to navigate, and it's nice to get something like I had today, which was Broadcom, right? Which is a monster move. Now, this was kind of interesting on earnings day. I thought Broadcom like crushed it in terms of their earnings report, and there was very little reaction. But what was nice is, I had mentioned I was watching this 923 level, and we set this up in the trading room quite nicely, and it broke in. Right, here's what the price, it kind of hesitated there at the bottom of value for the week too. But I did put on a position on Friday, and I talked about it in the Friday video. And again, I just added a starter. I didn't put on anything that large, but I put that on about 20 minutes before the close on Friday. And I took several targets in it because I didn't expect it to be up that much. I thought it would hesitate at the top of value, right, which is right around 988. I didn't think it was going to blast through another 50 points, but really strong, nice volume, and it wasn't just Broadcom, right? And again, maybe some of these other moves were part of the index rebalance, selling a little bit of Nvidia because CLAC was up nicely as well. I didn't see any new, and maybe I'm missing some news. A&D had some nice follow through. Let's see what it does on that VPOC takeout. And here was my trade idea last week too. Right, I really was kind of interested in this Broadcom report. If you can't read this, basically, I went long SMH last week. Right, we did see some call buying in things like AMD and SOXL, which is the levered ETF, and I just thought I really liked the technical setup in Broadcom quite a bit. So I went long SMH. Right, and it's also like, this is another thing too, that it's a good point. Like, I know that there's so many great traders, right, who on Twitter who talk about, like, of course, single names, right? But you don't always have to pick the single name to get alpha, right? As long as you're getting the sector right. Look at what SMH was up today. It was up 2.4%, right? And if you picked instead Nvidia, right, you were kind of disappointed today with it down 1.8%. But believe it or not, you got it all with the, and this is why I went long the ETF last week too, was I didn't want to pick and choose the individual names. I didn't know if it was going to be Nvidia or AMD. I like that we saw call buying in both last week, but I just thought that sometimes you don't have to pick the individual names if you think a strong move is coming. Now, Oracle reported after the close today, so it might bring down the semi group, but this also looks pretty good. The software group was up 1% today. That also outperformed, right, and trying to kind of resolve higher. Now, I picked CRM today, right? CRM did okay. It was up 0.5%, but I would have been better off going into the IG, going right into the ETF, right? You're going to get a good move if the whole group is in favor. And we'll see how it goes with Oracle. But so in any event, I'll keep being that we've got a lot of events this week. That was that's what I did well today, in terms of my winning trades. I also had CrowdStrike, which I'm just kind of following the trend here, right? I heard that there was more cyber attacks or some cyber attacks with China or something. So this is continuing to trend higher like this. So that works fairly well. I want to reduce some trades, so I got out of my Microsoft trade today just because I have enough, risk on at this point. All right, guys, that is it for today's recap. I hope that helped. By all means, let me know if there's any questions about the index rebalancing. But yes, it is just a quarterly thing. You don't have to worry about this next week. All right, guys, thanks and have a great night.